Hi everyone, and welcome back to today's morning report with me, Richard Perry, market analyst at Hantec Markets for Friday the 7th of March. This is Non-Farm Perils Friday, and usually a big day for currencies. Going to move on to dollar yen now. Amid the improvement in risk appetite yesterday, and ongoing actually from recent days of gains in dollar yen, we've seen a breakout finally above 102.83. Now, is this going to now be the big break that we've been waiting for after having several weeks of pretty range-bound trading action? Dollar yen breaking out above 102.83 should theoretically be the move that we have been hoping for. The technical indicators, certainly on the daily chart, are improving. The RSI, as I said yesterday, is now at a 6-week high. Stochastics in positive configuration. The thing that is slightly of concern is that the MACD lines are still below zero, so not really backing up that positive outlook yet on the MACD lines. But certainly, I think this break above 102.83 is an impressive move, and certainly on the intraday chart suggests that there is sort of room for upside. I think you've got, as I said, this that was the test in mid-February, which fell over, but you've seen this breakout, and it's now beginning to try and use support of that 102.83 support line, which resistance turns into support. You've got a nice band of support. I just want to point this out at around about 102.60, which has been seen as used as resistance throughout the back end of February, and now turned into support in the last couple of days. So I'm thinking that this chart may now just drift, I think, back towards that support, and possibly use it as the basis of a new level of support, because I think it still has room to unwind this chart. These are the hourly momentum indicators, which are just falling away slightly as it drifts back towards that 102.83 mark. But certainly there is room for a nice unwinding correction within this big move to the upside that we've seen in the past few days. Am I going to chase this higher? I'm not entirely sure. I think I'd rather just wait for a pull back into a band of support. 102.61 I think is a fairly decent area, I think, on this chart, to start thinking about long positions, because theoretically, and what I said earlier, the break above 102.83 is now the break that we've been looking for. Now, the problem being that investors start to think about taking profits, as certainly as the dollar yen is at a 6-week high now. So just be careful for that, as this move might unwind a little before pushing on higher again. Non-farm perils today adds a bit of extra spice, you could argue. The expectation of 150,000 jobs is unlikely, or the chatter amongst the traders is not likely to be beaten. So that disappointing news could hit dollar yen today, and that could drag it lower, possibly, but as I said, back towards that 102.60 level support. But ultimately, I think dollar yen should now be pushing higher for a retest of this 103.44 mark, and then ultimately further upside in due course. Anyway, I wish you good luck in your trading on dollar yen today. As I said, don't forget non-farm perils at 1:30 GMT, and I will speak to you later. Thank you.